Hey, this is Matt from InvestiQuant. Today is Friday, April 9, 2021, and yesterday was once again another strong day in the markets. We ended up closing at another 52-week high. We got some more overbought readings, a couple different ones today that we'll be looking at. That has to do with the 2-day RSI and the Bollinger Band. So we've looked at a Bollinger Band overbought reading here in the recent weeks. We have not looked at the RSI recently, but this morning what we're going to be looking at is what has happened historically when you get a flat open like we're currently seeing. We're currently trading right around yesterday's closing price, not too far from it, following an overbought reading on the RSI and the Bollinger Band. So let's set this up. Let's look at all four instruments. The setup will be based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. Now, for opening filters, I don't know which way we're going to open. We've been trading around yesterday's close early on this morning. We may be opening up higher. We may open lower. I don't know. But what we're going to be looking at specifically for this study is when we're opening fairly close to the prior day's closing price. So I can do that several different ways in Discover, but what I'm going to do today is I'm just going to use a custom gap size as a percent of the 5-day ATR. So I'm going to come in here and I'm going to put a maximum percentage of the ATR as kind of a buffer zone around where the opening print is relative to the prior close. And I'm going to put in 20%. So currently in the S&P, the 5-day ATR is coming in at 33.25 points. So 20% of the 5-day ATR is about 6.5 points, just over that. So the way this is set up for today, this means that the opening location could be plus or minus about 6.5 points from yesterday's close. And I'm not adding a gap direction, so this means the study will be looking at up and down gaps as long as they're fairly small in size, falling within 20% of the 5-day ATR. Next, I'm going to go into the indicator section and I'm going to grab those overbought readings that we have from the active today section. So the 2-day RSI finished above 95. That is a very high reading, short-term overbought reading. And then we also closed above the upper Bollinger Band, so I'm going to add that as well. And then lastly, I'm just going to throw it above a 200-day simple moving average. And that will conclude all that I want here for this study. Now I can click View Results. And here we go. These are the results based upon entering the market long at the open of regular trading hours, 9:30 a.m. Eastern Time, and exiting at the close, which is 4:15 p.m. Eastern Time, when you open fairly flat, and I'm defining that as opening within 20% of the 5-day ATR in either direction from the prior closing price, after a day that had a 2-day RSI reading of above 95 and closed above the upper Bollinger Band. This is taking place in a bull market, which I've defined as above a 200-day simple moving average. Historically, we've got 61 samples in the S&P dating back to 2003, the NASDAQ coming in with 94, the Dow 78, and the Russell 73. And the win rates on these are all favoring the long side. So the S&P, 66%, the NASDAQ, 66%, the Dow, 62%, and the Russell, the weakest of the group, at 55%. So all of them 55 or better, with a couple of them getting up to 66%. If we look at the average win, average loss, the average win is larger than the average loss in the S&P and in the Russell. Now, the NASDAQ, the average loss is bigger than the average win, and for the Dow, they're about the same. So not a huge difference in the average win to average loss as a grouping, but if you look at the win rates, they are favoring the upside. So historically speaking, this type of move where you get strong overbought readings to the upside has typically favored more upside the following day. So hopefully you found that helpful. Good luck today, and we will see you next time.